What if I tell you that it's hard to lose money in Indian stock market? I'll tell you why. So this is the reason why. Nifty in the last 20 years has gone up by 11 times. So if I zoom out and look at this chart, this is a chart for Nifty. 20 years ago, Nifty was trading at closer to 1000 level. So in the year 2000, Nifty was around 1000 and today it's much closer to 12,000 level. So in the last 20 years, Nifty has gone up by 11 times. And if you look at the Indian economy, in the last 20 years, Indian economy has also grown. So if you look at Indian economy, India is world's fifth largest economy now. So this is the latest figure that we're looking at. US is number 1 and India is number 5. So it's the world fifth largest economy. So Indian stock market has grown, as you can see from here. It has gone up. Indian economy has grown. Even the town or the city that you're in has seen tremendous improvement. So why is it that the retail investor, the normal Indian investor, is still struggling in stock market? Now the reason why the retail investor is struggling in the stock market in spite of everything going up is the kind of portfolio that they have developed for themselves, the kind of companies that they have chosen for their portfolio. Now it's the portfolio that holds the key whether you build wealth in the stock market or you continue to lose money here. It all depends on your portfolio. Now Indian stock market is very forgiving. I'll tell you what I mean by that. So Indian stock market has been very forgiving. Even if you invest at the worst possible time, you would still be able to make money here, or at least you will not lose money. So let's say if you invested somewhere in the year 2008, right at the peak, the worst possible time to invest, let's say you invested somewhere here, but you had a long-term horizon and you invested correctly in the right kind of portfolio. Let's say you just invested in Nifty. You can invest in Nifty through ETF, exchange traded funds. So let's say you invested in Nifty right at the peak, somewhere around 6200 levels, as you can see. And then the market fell and it just kept falling, and in fact it went down by 2/3. So we invested right at the top, worst possible time, but if you had a long-term horizon, see what happened after that. I'll zoom out a bit. This is where we invested, right at the peak. And if you would have stayed invested, the money has still grown. So from 2008, 62, 6300 levels, we are closer to 12,000 levels now. So although it has taken a long time, but you would not have lost money. In fact, you would have ended up making some money. So you chose the worst possible time to invest, but still made money because you had a long-term vision and plus you had the right kind of investment. So why do people lose money here if everything is so good? Well, there are two things. One is they are not investing at the right time, they're investing at the worst possible time, plus they are not investing in the right things, they are not building the right kind of portfolio. Let me give you a free tool to manage your portfolio. Click on the link below and learn.